Awesome. Thank you, William. Thank you for joining us.
Yeah, that's great. Great to be here in the Griffin office as well, as you can see from this sign behind me.
For everyone listening, it's very ironic that William, who actually isn't an employee of Griffin, is in the Griffin office, and me, I am a Griffin employee, and I'm in Northwest Germany. But that is the way with remote hybrid work.
Yeah. Holidays, remote work, times of the year, etc. And I've been plodding around the city doing meetings for my different fractional jobs that I do. So that's why
Cool.
I wanted to rock up in person here in joyous Salisbury House.
Makes sense. Makes a lot of sense. And you were showing me earlier, William, the
Oh yeah.
the badge. Do you want to tell people
Yeah,
what
yeah.
that's about?
Sorry. This is the little joke start about Griffin. So I don't know who else is old as me, but some of you may remember, and I had one of these, the Griffin Saver account that was from Midland Bank. I think I've got it right. It's kind of in the mid to late 80s, and if you were, a teenager where they were trying to hook you into life with the bank, this is Midland Bank, which became HSBC. You both got the Griffin Saver badge, and I really had one at the time. And I think you got like a nice kind of carry satchel, kind of gym kit black thing with the branding on it too. But I remembered this, had a chat with CEO of Griffin, David, and Phoebe, I guess recently CRO, and we've been joking about this basically about how the brand goes around and comes back, and hence I bought them a couple of these, and we'll leave them in the office at the end. But yeah, it
Oh,
was a
that's very kind. That's
throwback.
very kind.
Yeah.
Yeah. How much changes in 40 years, hey? From
Well, you know
Midland
what?
Bank.
Also, yeah, in terms of banking, the other thing, what I really remember, well, I thought about this before we were started. When I was then at university, they were obviously trying to hook you at Freshers Week and so on, and there you got more than a badge, you got free beer. I remember. This would be like mid 90s at this point. Yeah, get a set of 6 cans of whatever it was from I can't possibly it was Barclays even at the time, but obviously a whole different generation that would not happen nowadays. So you've gone from badges as a kid to beer back in the day, and definitely not anymore.
Yeah, we never got beer. I just remember
Okay.
Santander, I think, offering a few £100. I think they'd recently entered the UK or something. But
Oh, I think I was before
anyway,
your time. Yeah, what didn't seem to be cash bribes so overtly actually at the time. It was
yeah,
free random things.
yeah, no, they clearly just cut it all out and just go straight for the cash. But
Yeah,
hey,
yeah, well, yeah.
yeah,
Which is how I behave on, reward financial services reward systems nowadays. Just give me the cash. I don't want points that are locked in. But anyway, yeah, maybe I should introduce myself. Hey,
yeah, that'll be awesome. That'll be awesome. Yeah,
yeah. So as you can tell, I'm William. I have had 25 years plus in fintech before it was a word even, and particularly in payments. Fintechs now could mean so many different subcategories, but it's payments, initially fiat payments, and now it's a mixture between fiat and the DeFi, crypto, stablecoin, central bank digital currency world. And this kind of started by fluke because I was sponsored through Imperial, so quite a technical university, by a management consultancy doing due diligence in the dot-com boom that became the bust in late 2000, 2001. And a few of us basically got made redundant when they failed to list that bit on NASDAQ just as it was crashing and burning. And a couple of us from there and another guy went to found what was fintech, even though that wasn't a word then, fintech number one, called Exaris, doing prepay virtual Visa, initially only Visa, and then MasterCard cards for consumer purchasing when that was something you were worried about buying on the internet in 2001, 2, 3, and so on. We had a consumer brand. It kind of worked before you had all that kind of VC firepower money that came in a first wave around prepaid cards, actually a bit later in the second half of 2000s, really. Um, and I was the COO there, so the jack of all trades when it starts as three people, literally in a bedroom in my house, but it worked. And it pivoted, usual story, became a corporate purchasing via virtual cards arrangement, and then got travel industry specific. And I had just as that was happening, I kind of naturally left after 8 or 9 years around the time of the London Olympics. That company carries on and eventually gets sold to Neem, who are a pretty big global player. worked quite well personally. I'd gone to try and do it again in startup number two, which is now becoming truly fintech as a word. Fintech as a word, by the way, there's a famous Times graph. About 2013-ish onwards, there's a big hockey stick, classic VC hype hockey stick, but that's actually what happened in the use of the word in the media. So that's when it really became a term, and that was when my second startup called Guanji doing SME foreign exchange comparison platform, a bit like a money supermarket, but with centralized KYC, blah, blah, blah. Had a go at that with a bit of seed money. Didn't really work because you couldn't get the unit economics of acquiring an SME versus little dinky, ever declining share of an FX spread to add up. So that one didn't work. Bit of day rate consulting in fintech, and then a large chunk of time at a payments as a service provider, one of the really early vanguard players who would sell you accounts on account-to-account payments and then added cards and so on, called Modular, who are still there, still an option in UK and Europe, electronic money issuer by regulation. I joined them 2018-ish and, saw the hyper-growth phase there. I was probably about 35 employees when I started, 400 when I left in end 22. And what I've been doing there was kind of expert contributor, wingman to the C-suite doing the payment partnerships. So, figuring out who underlying that EMI is the banking as a service or the agency banking partner to make things move, or cutting them out of the stack and going direct, which was a relatively new thing, allowing non-banks to connect directly to faster payment backs and in theory chaps. And doing those payment relationships, basically card issuing memberships, etc. So that was great fun. One of the leading two EMIs at the time doing that. The other one, by the way, was Rails Bank, who we come back to maybe a little bit later, and the differences and styles and what happened regulator-wise. And then N22, I went independent, and I've been meaning to do this for a while, but basically, Modular was not doing those cutting edge new payment products. I'd been investigating how to get into new geographies. Not going to happen during that phase of consolidation. Fintech went from boom to retraction and is not going to spend its millions on getting into new markets at that point. Kind of reopened again more recently for various players. And I went independent, and I'd had this in the back of my mind from a little bit of coaching. I want to, when the hairs get grayer and I get a bit older, more experienced, go fractional across a number of different jobs at the same time, and in theory dial down the workload a little and spread the interest and get lots of exciting things to do. That took a while to get going because 2023 was a bit of a fintech nuclear winter in terms of funding and investment and spend on anybody like me, but got moving nicely. And after about a year, everybody told me it takes a while to ramp up. And then particularly from late 23 to date, I've had anything from, 3 up to 6, which is probably one too many, but fractional jobs, anything from 1 day a month to 1 day a week, with companies across the whole spectrum, literally A to Z, or Z. So at the moment, I've got one at either end and some in the middle. The A is a company called Azure, who do the middleware and kind of UI app building layer on top of either payments as a service, EMIs, or banking as a service banks, like in theory Griffin, through to at the opposite end. So that's a fiat kind of get your embedded finance launched more quickly and get everything to market, everybody happy, quicker play. There's some others in the middle we maybe come back to. The Z is Zebedee doing Bitcoin rewards for gamers, working nicely, and they're extending their payment functionality. So that's what I do.
Wow. I mean, there's so much we can talk about.
Yeah, although we got a plan on a particular focus of interest, I'm assuming, to our audience here. But yeah.
Yeah, but before we get into it, why I'm absolutely fascinated by your founding experience and that first kind of fintech experience.
Oh yeah.
Why don't you tell us a little bit, William, about what was it like in the early 2000s starting a fintech?
Yeah. Well, first of all,
Yeah,
sorry. Yeah, when it
yeah,
wasn't a thing to do, and
yeah,
it
yeah.
wasn't a word. Sorry, I jumped in. Yeah, the answer to your point is that was a bit of a fluke, meaning I don't think it was a very conscious decision. It's not like we can save the world, or there's a deeper meaning. I now think in, and that's what I particularly like about the founders I now help, is where they have got some deeper purpose to their, it's always a fintech really. Come back to that, but there wasn't really that. As I said a bit earlier, it was, oh, we've all fallen out of a management consultancy. We actually got offered another job doing exactly the same thing, and a couple of us went, nah, that's boring. And you're in the personal circumstances, no mortgage, no kids, or whatever it is at that time where you can basically take the risk. So there was a bit of that. It was initially a university idea of the founder, Alex. Actually, the founder, Alex, CEO, Alex Mifsud there has gone and done it again himself and is off running with Weaver. So he's doing it again in fintech overtly. I think I'd had enough of it from a stress and um, overload perspective, to be honest. But back to the first occasion. So it was a bit of, there's a visionary guy, inventor Alex, with a clever idea. We're just going to try it. Let's pitch for a bit of seed money, which was quite small by even accounting for inflation by modern standards, a lot smaller than you get nowadays. And this idea was an internet security toolbar. So it was not just the payment instrument. It was all about shopping on the internet and how you protect against that. Again, don't forget, this is, even late 2000, this one, 2001. That was a big deal at the time in internet, zero point 0.1 or wherever we were e-commerce wise. So, but it started as the Internet Security Toolbar. We got a partnership with Alliance and Leicester, their card issuing division, which is an old, if you don't know, an old building society that got wrapped up and merged eventually. I believe I got it right into Nationwide. But we got that deal. We sold something before we even got the funding, an internet security bar for Alliance and Leicester's card holders when you go shopping online. Then they bloomin' sold the whole card book to MBNA, even with but not fully known by the guy who'd done the deal with us, who was the head of the cards division. Suddenly you lose your key partner, so you're like, oh god. But it proved we could sell something. Helped us land that first whatever it was chunk of £300,000-400,000 at the time, and that's where it developed from. And then quite quickly it became, as I kind of vaguely mentioned, a one-time use virtual card idea. So you had to persuade a bank. Again, this was not normal at the time, basically the prepay world. You had to persuade a bank to generate those card numbers for you, which started as Bank of Valletta in Malta, again through personal connections. They're the number one bank, have been for century plus there. Started through personal connections because Alex was Maltese, had lectured at the university, all those connections. That's where the idea came from, and that's how it kind of gets started. So a bit of a fluke, pivots, your usual pivots to find product market fit, and then
Yeah.
selling it. You think you're going to do one thing, consumer centric, and it ends up slightly different purpose, and then it ends up corporate purpose. So you've got all those,
Yeah.
particularly at the start, 2 or 3 years of rapid iteration, definitely all that.
Yeah.
Hmm.
Wow. Yeah. I mean, I remember those days when you talk with like friends or family and there were like different camps of people as to whether they would like do online shopping or not. Some people would be like, I never shop online. It's so dangerous. Or like other people would love it. And like it was just such a different world. And like I say, yeah,
Yeah.
the word fintech didn't come into vogue until 2013, like a long time after. So yeah, to start a prepaid card business and the security toolbar, like back then,
I mean, there were
very,
other
very
people
cool.
at the same time doing other specialisms. In fact,
Mm,
Miles and Co., the people who did Modular, who I ended up working with, they'd competed with me to a degree at least with a company
mm,
called Corporate Pay, which was virtual cards for various immediately for various corporate purchasing purposes. So you had people doing that, and then I remember what was his name, Rich Wagner of what was Cash Plus, and I think is now Cash Plus Bank. Again, he had kind of underserved or underbanked, credit builder, prepay centric products in the market at the time. So this was that first wave, I suppose, to the point of the evolution. This was that first wave I see, at least, or I experienced of, yeah, prepay centric propositions, various shapes and forms.
yeah. How has it evolved over what I guess a quarter quarter of a century to put it one way,
Oh,
over
thank you.
25
My
years?
my
Ha-
grey hairs, yeah. So you remind me, talking of which, I occasionally run in, obviously I work for other companies now, but I meet in amazing, reasonably fresh grad age people, and you'll say something about payments in the pre-internet era and their face will just gloss over. It's remarkable. That's my real sign. Or in the pre-mobile phone era. one or the other of those, they're like, geez, this man is old, and what on earth was that? How on earth could you cope without it, basically? Um, so yeah, but sorry, your question. Remind me, I apologize.
Yeah, sorry, no, all good, all good. The evolution of
Oh yeah,
fintech, but also if we then maybe zoom into a little bit about like the infrastructure around fintech, and obviously what we're interested in is Griffin, the like the banking as a service, or yeah, the
mm.
general infrastructure around the
All right,
fintech
yeah,
scene over those kind of 2 decades or so. Now, because you've
yeah,
been there
got it.
firsthand. Yeah.
Yeah. Sorry, I got distracted by the old man and moaning, but I'll answer the question this time. So yeah. So the way I experienced it, as I said, there was that prepaid cards bit I just described. Then I think, kind of in parallel, you got people doing infrastructure blocks that were accounts and account to account payments. And just for clarity, I'm going to stay pretty UK centric, although I've got European experience too. But so the language is scan sort code account numbers, so a unique account per consumer or business, whatever, and the account to account payments, which I suppose at that very early stage may not have even had faster payments on it. I think that was 2008 launch. But yeah, were faster payments when it did come, backs for sure, with all the subvariants thereof, and chaps for obviously for the high value. Initially, the only almost instant payment method. So people were coming in with infrastructure plays like that, and often it was non-bank players. I'm not sure I'd even say EMIs yet. I can't quite remember when the PSD1 came in, but possibly even before that. You had players who were packaging up services from banks who were ultimately, like particularly Barclays is one of the super early players, comes to mind. Barclays PPS, now Eden Red. But that was a very early, for me, a very early infrastructure player that had, a traditional high street bank who didn't want to sell directly in this manner to um, fintech style services, paired up with value added by when it became available, the EMI, when that regulation came in, sold up into the market with account to account payments. And I suppose you shouldn't forget there was a kind of equivalent logic on the cards space as well, bin sponsors. So you had, so this is card issuers, infrastructure providers for card issuing. I suppose in the super early days, we had people like Raphael's Bank and Newcastle Building Society that had an interesting journey. Became Wirecard, then became Railsa, etc. So that was to know some of the employees there. That was a wild ride for them. But yeah, there were players like that in those two different ways. I'm not sure I'd call any of them, by my definition, what we're about to come into, the kind of clear cut, how I define it, payments as a service or banking as a service propositions. They were obviously infrastructure plays where either a fintech or a kind of corporate brand could come in and build services on top. But yeah, that's around the kind of 2005 to 2010-ish phase. It's maturing. It's quite a lot of manual build each time. The entry tickets are quite high. Cloud didn't pretty much exist then, so your launch infrastructure is not cheap. I remember our poor CTO Damon back in the first company getting a streaming cold from standing in a data center directly in all this air conditioning for a day, building the racks. So you had all that and the entry ticket and the whole time to market, the whole hassle, etc. involved. Then around 2015. So I'm trying to take deliberately 5-year steps. It's never as clear cut as this, is it? But it all gets a bit. I think there's a bit more of a big overt wave of particularly EMIs, payments as a service providers, launching, infrastructure of the various types, account to account, cards, maybe all combined or separate. Basically there was another big wave of players, and the two I'm going to focus on were my ex-employer Modular and Railsbank, just because at the time they were particularly early non-bank entrants. They were head-to-head arch rivals. There was always, if you were a customer thereof, you were going to two at the start and figuring out who was best and negotiating against each other, etc. Again, you still needed those infrastructure EMIs, those payments as a service providers, still needed underlying banks in some cases. So they might, a la the PPS prior example, they might use a Barclays at one level, for certain payment functionality. They might have, if they were an FX specialist, not particularly, I don't think that Modular or Rails were at the time, they might have an FX specialist bank like JPM or Citi under the bonnet. So it's an interesting point that those big players were always, providing services to this market, if only one layer down in the stack. And then also around that time, again, I think the guy I mentioned earlier, Rich Wagner, pioneered this, that became a route for non-bank regulated players to basically plumb in directly to the UK payment rails. I think that's around 2017-ish plus, around about then. It became possible to get to faster payments, backs and chaps without having to go through a bank. And so some players began to do this. The very first was for faster payments was Cash Plus. I think I might be unfair to a couple of really small players. The second was TransferWise, as it was known at the time. And this is where you wanted more control. Once you had a lot of payments, it made more economic sense to do it direct, as we did when I was deep into Modular for a couple of those. So there's that infrastructure changing. Some still use of banks, if only led through another service. And some banks you could go to directly if you were a very big player. NatWest was in the market. Barclays gone hot and cold a bit on that. HSBC never really started. Santander had one agency banking, kind of true third-party agency banking relationship ever, which was with us at Modular, and then decided to get out of the market. So the point is, alongside the EMIs, the big banks played a bit. So that's phase three. Let me pause for any questions there. There's a couple more phases, but I don't want to just talk forever.
No, all good. Let's jump into
All right,
the
keep
fourth
going.
phase. Yeah.
All right. So where we got to, we're then getting kind of mid 2015s onwards. I suppose the banks decided they needed to respond a bit in their own right. This is the big high street banks, to be clear. And so you could selectively, occasionally, like that NatWest example, go direct. We also had people realised that it's an interesting phrase, a headless bank. Griffin is a headless bank, even though it is its people, right? Which means API first, don't have branches, don't typically do any at least direct customer facing service typically, or compliance customer facing, etc. It's the infrastructure and so on. We had, of course, I think it sounds like it was incubated by Charles and Nick Ogden in 2015, and they really got ClearBank launching in 2017, and has really become the gold standard, frankly, infrastructure bank, although there's certain types of business you've got to be to play with them. So that was the first headless bank. That's the point, for the UK at least, and there were people in Europe around the same time like Solaris and so on. That's the kind of late 2010s. There's a couple more phases, and then we can break it down wherever you like. I reckon 2019, 2020, there's suddenly this explosion back on the payments as a service players. So not so much the banks, where there are all kinds of EMIs. So many came out of Eastern Europe, and everywhere, but specializing in either certain payment types or corridors or industry verticals that it's applied to. Anything from, we're doing remittance infrastructure for customer-facing remittance companies for a particular corridor or region, Asia or LATAM or whatever, through to real card specialists who are focused on that. So you got that sunburst, which I suppose came with the COVID bubble, frankly, of easy money, easy VC money, and hence people trying a million and one things. And then the final phase, as I see it, is obviously, there was obviously the kind of financial retrenchment. I've talked about that kind of 2023 lull, but also actually I see more banks come back in. The big banks did a few things, like there was NatWest Boxed, took a while to get going, recently announced, first fully up and running client, the AA, etc., which is deliberately only a large corporate focused banking as a service play. And then, of course, we mustn't forget, name behind me, Griffin. Really, you've been brewing for a long time. You did it pretty quick to get your bank license by those standards, but you only really got your teeth into the market in what would you say, mid late 2024?
Yeah,
Yeah,
last year, almost exactly
yeah,
a year ago. Yeah,
yeah.
yeah,
Once it got moving. Um, so yeah, that's the final wave. I'm going to break down at least was that wave where
yeah.
you've and there are other startup banks around. Bank of London blown a bit hot and cold recently, but there's been a few rounds of this selling infrastructure. There's also been, incidentally, intriguingly, big banks like Goldman Sachs transaction banking. They were
Mm,
doing a strong play a little while back. Admittedly, this is 4 years back, and
mm.
um, yeah, rather evaporated away. And for them, I suppose it's the revenue versus the risk model. Just may not add
What
up.
is that model? What if we dive into that? What do you think happens in that kind of, because I think we've been through this period, and what is really missing is that the big banks have kind of stayed away from that. They're just not really that present in the market. They've like dabbled in it here and there a little bit, but like you say, it's not been like as consistent as you'd imagine. Like, what is that kind of risk and revenue equation from your perspective, and how do you think they might see it?
Well, yeah, right. So we need to stay on the bigger bank players, and I think it varies a little. I don't want to be
Mm,
unfair to
yeah,
some very
of course.
big. No. But the point is,
Yeah,
I've had recently an RFP that's had a number of the names we're talking about, the UK banks, anything from the real big ones to smaller. Yeah, and the bigger end of that, the NatWest or whoever, they're not utterly. They were utterly risk averse. They're not anymore. You know, to take an obvious example, crypto association. We want some. This actually isn't that particular RFP, but um, a crypto associated player wants a set of banking service or payments as a service accounts and infrastructure. Everybody's willing to talk about that particular example now, so they're not that averse. I think it always boils down to the compliance angle, because so many times you have seen basically large money laundering fines on the banks. UK are not the most extreme, but it's quite a number of years ago, admittedly now. But HSBC gets $5 billion for Mexican drug running, not properly doing its AML, KYCB, etc. There's been some more recently. We saw Revolut, didn't we, actually, out of Lithuania, not a bank, well, becoming a bank, nearly there in the UK. Starling had a bit of it. The basic point, if you're selling agency banking or banking as a service, is you've got this tiny little typically per transactional revenue, per transaction per account revenue that yeah, you might sandbag a little with minima or whatever per month. Typically, everybody does. But you've got that income line over there, and then you've got, well, what the heck is the risk I'm taking, and the potential for those massive money laundering fines. And think of it from there. It's very,
yeah,
very annoying when, as a fintech, you get debanked, and that's been a whole hot topic.
yeah,
But from their perspective, makes complete sense that this risk reward does not add up. Um,
yeah,
which is why then either people tighten up on you in terms of compliance, and whilst they're willing to delegate it to you, let's just call it the fintech running this program or this
yeah,
activity, or like Griffin, they go, the only way we're going to do this is we, the bank itself, do it in house, which is a big distinction. Some banks will do that, some won't. Some payments as service companies, EMIs, will do one and or the other model only.
yeah. Yeah, it's fascinating. Yeah, I mean, when I joined Griffin
Hmm.
3 years ago, just over 3 years ago, I think that, the obvious question in my head is like, why is no big bank doing it? And it's always interesting to hear like different perspectives around this thing, because sometimes it just seems so obvious, but then yeah, when you dig into it, like you say, that risk reward equation, the potential for fines, the technology that's involved in like facilitating that business model, because it's a totally different business model to having a high street branch and serving your consumers or businesses
Yeah,
in the way
but
that you typically do.
some of those big players have had teams
Mm,
telling, well, they have used different names, but agency banking as a service for
yeah, yeah,
5 years plus, and they've got specialist teams. People who've been in the big bank all their
right,
all their career, 20 years plus into it, who do focus on that. So I think they've worked it out, but it's always an interesting balancing act. Something else I wanted to say is I definitely have
yeah,
seen more banks basically even bigger ones, a la the
Mm,
Griffin model, saying we'll do the compliance for you. That's
mm,
I don't think it would be fair to name them, but there's a couple of UK
interesting.
larger
Yeah,
than Griffin who are going down that route in selected lower risk client
yeah,
circumstances where we'll take you, maybe take you a bit earlier, but we're going to do the compliance for you.
yeah,
It's a
yeah,
big distinction because
yeah,
it de-risks it. If you've, logically, if you've got more control, you can't. Well, you've got more visibility and you
yeah.
don't get into problems. I must make point out, I think it was very unfair on them, like Modular did a while back. Everything's good now, but they had a
Mm,
moment where they had so many people with that kind of delegated compliance
yeah,
oversight that the FCA had a wobbly. Again, I think unfairly, but you know, the big banks de-risk it by bringing it in house. Modular's done that
yeah,
to a greater degree as well.
yeah, yeah. I mean, it's definitely the route we take, especially if we're working with an unregulated company. Then, yeah, we've built the tooling to do the KYC and to carry out the transaction monitoring,
Yeah,
et cetera, et cetera.
yeah.
But yeah, it's just the way we were built
Well,
from day one.
verify and all that product that you call it,
Exactly.
absolutely, yeah. But I have to say, I think that so one of the jobs I do is, I'm not going to advertise anybody in particular, but one of the jobs I do is who's the right partner for you, and I've done that a fair few times. There's this big RFP I talked about earlier for an EU player coming into the UK. There's a much smaller one, startup. We can explain its business model in a minute because it is actually, this isn't a what's the word? It isn't a setup, but it ended up with Griffin as the best partner. But when whoever this is, you come in, one of the first questions you ask, one of the first checks is, do you are you going to be regulated in your own right? Basically, to me, that's the first question. Do you have a short-term plan to get your, again, let's just keep it in the UK, a payment license of your own before you go live, which is typically, depending on exactly what you're doing, talk to the FCA, a PI or an EMI, payments institution or an electronic money issuer license. Um, Often people have that plan, but it's going to take, we all know it takes, well, it can vary a lot. I'm hearing anything from 4 months if you're incredibly lucky from the point of submission, and you've got to prep for months anyway, to 2 years from the point of submission to get that license, even if you're going to do it. So you might want to get to market quicker. So the first question anybody's got to say is, do I want to get to market before that or not? Um, and that, to me, completely splits who you might. It's not entirely black and white, but almost splits who you might then go and choose, because it's pretty obvious that I just know them well, but other big banks are available. A NatWest is not going to allow you to move. They might allow you to get started, do the contracting, integrate, but they're not going to allow you to move real money until you've got your own license fully signed and sealed and any ifs and buts ticked off and cleared up. Whereas other players, quite a lot of the EMI payments service players, and this is the interesting point in terms of really bank regulated, I think possibly only Griffin will allow you to get started in some shape or form pre getting your own payments license, which, as I said, could be anything from 6 months to, if you're unlucky, 2 years sooner. So it's a real big question there, and this goes back to the fact that over there they, like you do, they've pulled compliance oversight and functionality more in house, so it's more under control. They're not causing risks to their own licensing, so you can get started.
Yeah, exactly. I mean that's exactly how we facilitate it in that particular scenario. Yeah,
Hmm.
we do all of that work, and then we're then therefore comfortable. Like we're not outsourcing it to an unregulated party. Yeah. So,
Yeah,
um,
yeah,
of
exactly.
course.
Although I suppose
Yeah.
a point there is if you're in that category, it doesn't mean you can have absolutely no in-house. If you're the buying fintech,
Yeah.
you can't.
Yeah.
You've got to have some decent, compliance oversight people, team members. You can't just go,
For sure.
I'm not
No.
going to bother. I'm not going to spend any money on it. It's not that black and white, but it does mean you can get started. Yeah, with doing it right, you can get started quicker and at a lot less cost
Yeah.
than waiting for the full-blown license.
Exactly. Yeah.
Hmm.
Exactly. But I mean, we often, I mean, I've done this before. We say, look, definitely go for your license. We don't want to
Yeah,
stop
it
you
can
going
do
for
both at
your
the same
license.
time. And yeah, I know
Yeah.
you'll
Yeah.
follow through once a license is in place. People will
Exactly. Yeah.
usually stick with you if, well, yeah, if both sides want to maintain the relationship. It
Exactly.
doesn't make any difference
Exactly.
down the line, but that get
No.
started is the key point. Yeah.
Yeah.
Hmm.
Yeah. How have you seen, William, regulation changing and or not necessarily even changing, but regulation driving the changes that we're seeing in the way that you talk about, like the split between banking
Oh
as a
yeah.
service and
Hmm.
payment as a service, and all and the stack that you described. Like, how much is driven by regulation? I mean, we've kind of touched on it already, but I
Yeah,
feel
I'll,
like there's
I'll
other
break it out
aspects.
a bit better. Yeah. I think the first point on this is yeah, I've been deliberately using payments as a service as distinct from banking as a service. And this is because to be honest, it's almost a personal touchy point because when I was at Modular, as I said earlier, the arch competitor was Railsbank, who called themselves Railsbank. Now they weren't really regulated to bank. Both entities were regulated as an EMI, electronic money issuer. So Modular at the time deliberately used the description, "We are not a bank. We do payments as a service." And actually, you know, Rails a great team. They had their issues. It's back and running. But Rails at one point got told you may not call yourselves a bank. That's why Rails Bank at one point got branded over to Railser, sorry, which is where it still is. But the point is, this does this matter? Doesn't it matter to the end, either the fintech or the end customer account holder of that fintech? I'm not sure. Well, it doesn't. It doesn't. Meaning, first of all, you've got to be clear about payments as a service. To me, is anybody who isn't regulated as a bank. Typically means EMI. Banking as a service means you've really got a banking license. Often people just merge those together and talk about banking as a service as a category for all, which is something as I said, for those reasons, I deliberately avoid doing. It's a bit
Yeah,
lazy. Um, I suppose that just to break it down, the difference is, and it's not as black and white as it seems, but you know, EMIs have what's the words? They have they have to they actually have to safeguard 100% of their funds. So all your money every night kept in those accounts, if you're the fintech at the EMI, has to actually, intriguingly and slightly ironically, be kept at large banks. 100% or more the coverage of all the client funds, make sure it's all right, prove it, etc. Um, but those accounts don't, for example, they don't have the banking FSCS, deposit protection, which is currently 85,000, is mooted to be going to 110 soon. Hasn't kept up with inflation. They don't have that officially, that protection. That's one nuance. Um, the other point is then over on the bank side, it's kind of subtle, meaning in theory banks can of course lend, so you can get lending products if you partner up with a bank when they're ready to offer them. They can also officially, overtly pay interest. Um, so, there are lots of people who in the UK market have launched embedded savings accounts where, frankly, they pretty much only work with a bank because the bank officially can pay interest. There are some workarounds of commission or whatever from various EMIs, but it's cleaner. So you've got functionality pros and cons of the two. You've got bank licenses just officially and I think slightly unfairly seen as higher reputationally to the end account holder. Pros and cons. In theory, a bank it can't lend its client funds, but it can lend. Well, it can to a degree lend its deposit. So is that riskier than an EMI who's got to keep 100%? I mean, there's lots of controls, Basel ratios, blah, blah, blah. Don't know. So, however, in a nutshell, if you have a choice of either as a fintech, my go to, I have to admit, would be somebody bank licensed, i.e., a Griffin over another EMI, like for like. You got the kind of extra seal of approval of bank. It is harder to get, requires more capital. Has the FSCS protection and can pay interest. And I think actually now I remember it's a relatively recent product launch of yours. You've just done that embedded savings account concept, haven't you?
yeah, we've embedded savings accounts we did last year, and
Ah,
then
sorry.
very,
Yeah,
very recently we it's still in beta, but it's available and it's being very much tried and tested.
yeah,
The
yeah.
embedded bank account product, so
Ah,
kind of
right. Sorry.
all-purpose account that you
Mm.
can slot in to all sorts of different use cases, whether it's kind of like customer facing or like more operational, but it's essentially a bank account that you want to embed
Yeah.
somewhere in your product or operational flow.
Okay. I
So
slightly
yeah,
cross wires on that. Fair enough.
no, no, no,
Um,
all good.
I
Yeah,
saw the product release note earlier this
yeah,
week even. But yeah,
yeah,
so
exactly.
so
Yeah,
so so yeah, so that embedded savings bit could be material to you. That European
yeah.
big European MI that was coming over. They're like, excuse me, we think we're going to need to offer this in the UK. So can you do it? Can't you do it? And various reasons, Griffin wasn't on that particular list, but from the other banks, yeah, some had it, some didn't. It was a particular, quirk.
Yeah,
So yeah, that's some of the regulatory difference.
yeah,
And then, as I said earlier, the other bit is so that's banking as a service in my mind versus payments as a service. Don't
hmm
mix the two up. Um, and then the other angle on that is we kind of touched on it earlier, but yeah, who's going to run the compliance oversight of
right,
your activity really?
yeah,
And again, as I said, I think Griffin as a bank by regulation is fairly unique in doing it for you just now with a few caveats. Um,
mhm,
whereas on the EMI side, it's a bit of a mix.
yeah,
But
yeah,
that's the other big distinction.
yeah. So these. Would you say these are kind of like the critical? It sounds like to me they're the critical decision points for someone who is kind of, if you're a new fintech or yeah, a fintech entering the UK market, these are some of the points you have to consider, whether it's like compliance, whether it's integrated or you do it yourself, interest, how much that means to you, what type of account. Um,
Yeah, and
yeah,
and you, and the other bit is another evolution going back actually to it's a different angle on how the market evolved. Players have typically, meaning any of the players, whether it's the
yeah,
EMIs or the banks in this what do we call it, fintech um, infrastructure world.
yeah, yeah.
They focused on different sizes of players at different times and so on. So
Mm,
just to give an example, I've seen, in RFPs over the last couple of years, entry tickets, your 3-year total contract value with another EMI, as it turns out, go up substantially. And that was very deliberate strategically about we don't want the small fry fintechs anymore.
right.
They've caused us compliance hassle potentially, or
Mm,
that so many of them go bankrupt that we're not guaranteed to collect 3 years of
right, right.
which is natural in the
Of
VC
course.
whatever evolution cycle. So
Yeah,
they're not all going to survive. People are moving around in the market. What they're targeting, anything from right at the, let's call it the premium end, a NatWest boxed is only going to go after big high street brands who probably have a NatWest relationship of some degree anyway, down to, and down isn't bad by the way, but down to Griffin doing much earlier stage, embryonic startups like the one I brought. Yeah.
yeah, yeah. Um, we kind of
You do
we've
all of
actually
them, yeah.
been
Yeah.
yeah trying to even do pre-seed
Uh,
if we possibly can. Definitely something we're looking to. Maybe it's worth talking a little bit
hmm.
about the example that you just gave,
Oh yeah.
and
All
going into
right.
the detail of that use
Yeah,
case
yeah, yeah, yeah.
and yeah,
So
yeah,
as I said, this isn't a setup, but it is the case that having looked at 6 or 7 of the players, well, I guess it wasn't pre-seed, but it was seed has so many stages. It was the first stage of seed. It did have some money. So a company who I still help a few days a month called Sable, founded by Jarvi and Tim. It started off. I think we discovered each other in Barclays Rise, and anyway, they're trying to solve the problems of late or no payment in the UK construction industry. Because if you can probably kind of guess, but if you didn't overtly know, of all the industries in the UK, that's the one where late payments or people going bankrupt in the whole pyramid from lender to developer to prime contractor to subbies, people don't get paid. People in the middle hang on to money for working capital cash flow purposes, and extend their terms unfairly. Blah blah blah. People typically down the pyramid may not get paid. Family businesses may go bankrupt. Nasty things about mental health or suicide may kick in. All of these things are the motivations behind that company. So they're basically solving that, and they're just done first launch. I think even last week we had the first payment start to move through Griffin, and it's all to do with rather than payments go through every layer of a big pyramid, you pay in at the side. Everybody gets paid on a kind of monthly cycle, kind of sideways, if you like. So you can't. It doesn't have to be trickle down. I think that's probably a nutshell way of describing it. So yeah, that's the one that's just getting up and running with Griffin.
Right.
And reasons to choose you. I'll advertise you briefly, and then we can move on.
Thank you.
No, but we're
No, all
we're
good, all good.
obviously that early stage friendly, um, willing to get started without the Sable in this case being regulated in their own right. Yes, they're on a journey to um, probably EMI, but it's a journey, want to get to market, etc. Very willing to have that compliance function done by you. Um, and then I have to say also the cultural thing. I did post on this completely independently about in LinkedIn quite recently about the cultural style of Griffin is quite unique, and meaning much. I mean, it all comes from David and his style, I suppose. But everybody, much more approachable, much more interactive. It's not like working with a bank or even some of the other banks I've mentioned. Which, if it's just a great cultural fit for, tech savvy. Let's brainstorm together. I remember sitting in this room actually a while back with David, your CEO, and can't remember his name, your COO. Um, and
Carter.
yes, Ed, that's
Yeah,
right.
yeah.
Going, how are we going to solve this on board? A new block needs to be built for complex entity onboarding, just another
Right,
block of your verify stuff, because construction industry does get sometimes public sector or some complex entities. You're
right.
willing to entertain it, you're constructive, it happens roughly on time. It's real, which is very different to some of the other bank partnerships I've had or EMI partnerships I've run in other cases. So yeah, honestly, that cultural thing's a real good
It's really nice to hear
differentiator.
that, especially when it's recorded.
Well, I had posted of it completely
And you did.
independently. Yeah,
And you did, of course. Yeah,
mm,
many, many weeks before we even did this. Um,
absolutely. Yeah.
no, that is
So,
really,
so,
really
so
nice to
that
hear.
that's a company using Sable. You know, again, advertise myself very briefly. I
Of
promise.
course.
This
Yeah,
is what I do. People
yeah,
come to me
yeah,
either in the traditional finance, as I call it, just to keep it simple, TradFi world we've really been focused on, or sometimes in the DeFi world. I've got
yeah.
from another client. I have my crypto-centric drink here as well, and my prop. And yeah, it's about specialist bits of payment functionality, how we're going to get this running, etc. As I said,
Yeah,
consulting anything one day, a month to a week, or even there's quite a lot of I just enjoy it and I've got time. If you want a pro bono chat or two or three,
yeah,
how would I even solve this? What do you reckon, William? Definitely up for that as well. So find me on
yeah,
LinkedIn. But we haven't
yeah.
finished. Yeah.
No, all good. I mean, and this is one of the reasons like we're here, right? Because you've had such an amazing involvement in fintech for so long. I think your experience is very, very unique. And I'm just really enjoying listening. And obviously, we've had the pleasure of chatting before.
Mm.
But
Yeah.
maybe we are already over our
Yeah.
allotted
Yeah.
time.
Yeah. Yeah.
It's all good. Why don't we wrap it up with just a
Mm.
little bit about the future? What do you what do you see coming up in the fintech world? And what really excites you about what's
What
coming
am I
up?
excited about? Well,
Yeah,
you've kind of probably heard it a bit. It's often those earlier stage companies where there are either just people, founders, humans with a great idea who you think they're going to go places, they're exciting, I want to help them. An example, I'll name check him because he was really stand out on some fintech mentoring a group of us did at Oxford Uni. Amir of what is now NSave, which started. The point was an incredibly impressive individual stood out from a room of 20 odd founders, but B had that kind of value added. How can this really help a group of people? He had Syrian family, middle class Syrians before all the wars kicked off there, family wealth destroyed by hyperinflation, blah blah blah. So he was trying to, and he has succeeded in doing basically a Swiss bank account for people from tricky countries, particularly in the Middle East. I think he's got actually Morocco right now as his main one. So it's not only the people, but it's there's a deeper motive. All that Sable example of solving, making sure people who've spent 15 years building their construction industry family business don't go have it go up in smoke through no fault of their own because the payment never comes in on time. So yeah, that's the people side of it. I suppose on a technical technical features side, I'd be remiss, and I do try not to get on the bandwagon. But AI, the AI in payments, AGI, what's the word? Agent or agentic. I can't say it, but agents
Agentic.
making
Yeah.
payments. Agentic.
Yeah.
That's the word.
Yeah.
Very real, very hot topic. The point is, there's real stuff happening.
Yeah.
One of my weight right now. One of the things was how ChatGPT, somebody spotted, has got Shopify. Basically asked Shopify to buy something built in. That's just hot off the press now, but there's all kinds of variants
Yeah.
thereon. That whole just find me the best flight, whatever. Getting that conversational payments or commerce
Yeah.
with the right controls and the right identity and the right identity verification. I'm not sure I'm kind of intellectually brain powered enough to be leading that, but helping those who are is super interesting.
Yeah.
Um,
Yeah.
and then the other bit with founders is you've got to change the model of what's the word? Change the model of your business as it scales. Like again,
Mm.
Shopify really has come up again recently. There was a CEO note about you can't hire anyone unless you can prove AI
Right.
can't do it instead. But more point is I've been telling people start playing with Lovable or whatever to build UI app layer pieces. How is this going to speed us up? Otherwise, we're going to get out competed. I do think that's a real thing in various bits and places. Your compliance teams with humans still needed, but lots of value added
Yeah.
to speed it up. So you don't need 50. You don't have to scale all the cost to 50 people.
Yeah.
It might make do with 5. Etc. And then the other bit is, that intersection, the third and final answer is that intersection of DeFi and TradFi, where,
Mm.
again, very hot topic, all that stablecoin stuff, like the Circle payment network is the big news of this particular week. But
Yeah.
it's where you kind of glue the two together. And I've had that from Zebedee. I did work at the Digital Pound Foundation, CBDCs, a Digital Pound. I last year was helping out a company called Arth who lends in USDC
Right.
ultimately to make cross-border payments more instant, which is then
Right.
solving and lowering the cost for remittance.
Yeah.
Low migrant workers sending money back home. So there's the human check. So yeah, there's a set of answers for that.
Yeah.
It's exciting,
Yeah.
but keeping up is
It's
interesting.
hard nowadays. It moves so quickly.
Well, and what do you rate as your main sources of information? And maybe I need to ask AI to take a bunch of info, program something, to read all these
Yeah.
news sources and give me a daily digest of the digest. I hadn't
Probably
thought of
can
that.
do that. You can probably
Yeah,
get an agent spun up
yeah,
with
yeah,
whatever
yeah,
you
yeah,
use,
yeah,
and
yeah.
yeah. No, it is fascinating. Even on the regulatory side, things seem to move more quickly recently, which
Yes,
is fascinating. Yeah.
yes, yeah. But that's a whole another day's discussion, I think.
That's another
Yeah,
few podcast episodes.
yeah, yeah, yeah. You need to get a regulatory specialist through and through for that one. But yeah.
Yeah. No, absolute pleasure, William. Thank you so much for joining us. I love speaking to you. I love listening and hearing your stories about fintech. And we'd love to have you on in the future as well. But yeah, I'm very grateful.
Yeah, thanks. And as I said, come find me on LinkedIn if you want to
Of
chat,
course,
any purpose or whatever.
we'll
Thank
put
you.
your LinkedIn details in the captions. Yeah,
Oh, there
in
you
the
go.
description.
Yeah,
Awesome.
click or subscribe, or no, not really. Click or subscribe down here. Yeah.
Exactly. Awesome. Thank you
All
so
right.
much.
Thanks
Thank you.
Mo.